US share markets increased overnight after President Obama provided some comfort to the financial sector that he will not be imposing newer and further regulations in the wake of the Goldman Sachs lawsuit. European shares did decrease after reports showed that the EU budget deficit was more than twice the limit imposed by the EU. Greece and Ireland have the largest budget deficits, and they were up to 13.5% of GDP. Nestlé provided some earnings results and suggested that sales from their existing sales channels is looking pretty good. Nestlé, of course, do provide infant formulas and other dairy products, and so this does bode pretty well for the dairy industry. The New Zealand dollar increased in overnight trade, and on Friday morning was trading at 71.10 against the US dollar. This came as the International Monetary Fund said that the global economy is recovering pretty well from the global financial crisis, and as such they have increased their forecast to 4% in 2010. They also suggested that the US economy is expanding much better than other economies in Europe and in Japan. Emerging economies are going pretty well and expanding rapidly, and commodity prices should stay firm through the medium term. This is positive news for international dairy and meat prices. The IMF also suggested that it is going to be a fine line between maintaining global growth rates at a time when stimulus packages need to be pulled back and inflationary pressures are mounting. Trade imbalances need to be addressed. China is running a fairly decent surplus at the moment, and they need to pull back or float their currency in order to provide a level playing field for other countries who are facing deficits. If they do pull back on their peg on the currency, this would allow them more buying power as the currency would strengthen. China is now our #1 dairy export market. Assuming that they do have more buying power, this would be supportive of dairy prices at the current high levels.